Hey, welcome back to the Not Your Average YouTube channel. My name is Joe, and this is my $100 investment series where I take $100, put it in an investment account, and see how far I can grow it. So excited to have you guys back for episode number 2. All right, so some pros of the account, and starting with only $100. $100 for me is not make or break, and therefore I can be a lot more confident with the $100. I can take a lot more risky trades, as well as try some new strategies and not be so worried about losing that $100. So the next pro is that when I lose on a trade, I'm only losing a little bit. Now, you may think that that's kind of obvious, but when you're losing $100 a trade on a $100,000 account, that $100, that number minus 100 really affects your emotions a lot more than that minus 100, like 1.00 for when you're only losing $1. And so emotionally, you feel a little bit better, even on the ones that you lose. Another pro, and the last pro for this account that I'm going to list, is that it's a great learning opportunity. Obviously, when you start with $100, you do not want to, or you do not expect to make hundreds of $1,000s right off the bat. Like, you're going to take it slow, learn some strategies, learn what works for you, learn what doesn't work for you, and just kind of learn different opportunities and different strategies. So that's a pro of this account. All right, so some cons of the account. First off, buying power. Obviously, my buying power is very low. Now, Webull allows me to day trade freely, but I have to wait for cash to settle. So if I only have $100 in the account, I have to divide that by 5 in order to use that money up sparingly each day, or I only trade one day during the week and just use that $100 to day trade. Now, if I do choose to go one day of the week, I can't make one trade worth $100 and then sell it, because then I'm out my whole 100. So it's going to be a little bit tough to try and navigate the buying power on this account. Another con is that penny stocks are my bread and butter. In order to get the returns that I want to get on an account that maybe has $1,000, $5,000, $10,000 on it on a single trade, I have to be trading stocks that are a little bit lower, a little bit in my price range that I can buy. So I'm going to have to find good opportunities for some risky companies, which is kind of tough to do. And the last con of this account is that I can't trade really any options. If I wanted to, I have to trade them out of the money instead of in the money, which is a little bit more riskier, a lot more riskier actually. And you can't get these crazy runs. Like Apple in the money calls are like $700 and something up to like $1,400, but they run $400 or $500 in a day, and they're in the money and they're good and they're great. And so they're not going to expire or worthless. In this account, if I'm going to buy options, I have to buy out of the money and really play it smart and play it correctly and have confidence in the stock that it's going to be where I want it to be when I buy the option. So that's another con of the account. So with these pros and cons, here are some of the rules that I'm going to live by on this account. All right, so with those pros and cons, here is the rule list that I'm going to live by for this series. First, my strategy starting out is going to be buying at confirmation of the 9-minute simple moving average line and selling at validation on that same line. So let me explain that to you. All right, so if we look at this chart right here, this is our 9-minute SMA line, or simple moving average line. And this just takes the average of the price action over the last 9 minutes or last 9 candles and kind of charts it out for you, which is really nice. And on Webull, it actually looks very nice. It's very clean, easy to use, easy to see. So confirmation is when our first green candle crosses, touches, anything, closes above this 9-minute simple moving average line. Now, other things have to be in play, like the RSI indicator, the MACD, volume, all those things have to create a good setup. But we're not going to buy or enter into the trade until it confirms on this 9-minute moving average, basically saying there's price action here, there's strength, let's go. Now, on that same line, our sell target is going to be the validation. Now, validation is when that first red candle touches, crosses, confirms below this 9-minute moving average. And we'll get into this trade a little bit later in the video, but that's kind of basically what the strategy is going to be. Confirmation here, validation here. And if we look at some other charts, sometimes it doesn't always work. So we would have bought in here, a confirmation, and sold here. So it kind of mitigates my risk management a little bit, helps me with my losses, because my stop loss is probably going to be somewhere around here. But if I sold this off already, then I wouldn't have lost this extra little bit right here. Now, I'm not looking at any numbers. I'm just using this as a pure example and things like that. So just so you guys know, that's just an example. All right, so the last rule for this account is to set tight stop losses. I know a problem that I've had in the past, as well as a lot of traders have who are new to this space, is getting married or emotionally attached to their stocks. They think they did such good due diligence and such good research that the stocks got to go up, yet it just keeps going down and down and down. So they average down, or they make their positions bigger at a lower price, and it's you're day trading. You have to be able to understand that I'm cutting my losses here, and we're going to move that money into another trade that can hopefully recuperate it back. So for this series, I'm going to set my stop loss at a 2-to-1 ratio, meaning I'm willing to lose $1 for every $2 that I want to make. So if, for example, I buy a stock for $100, my stop loss is going to be $99. My take profit is $102 because I want to make $2, but if it drops before it goes up, then I get stopped out and only lose $1. Now, obviously, every situation is different. Therefore, if there's crazy price action and the price is going past my take profit and things like that, I'll just move my stop loss up to that 102 so I secure that $2 profit, but then ride the price action for whatever else I can make above it. That's just a little bit of insurance just in case something crazy happens and there's this huge red candle that stops me out at 102. I still lock in my profits. So that's it, guys. So those are the pros and cons. Those are the rules, and let's get into it. Day 2. All right, so guys, I ran a pre-market scanner this morning at 9 o'clock on Thinkorswim, and I recorded it and did my research and did my due diligence and all that stuff, but I just didn't like the way it turned out, and I didn't like the way it was editing, so I decided to come back and re-record this. These are the main stocks that I ended up finding and trading today, and so I figured that this was a better way to do it. I'm just going to show you the pre-market of these charts and show you kind of my thought process before I went into trading them today. So AKBA, first off, was not one that I found today. This was one that I had in a portfolio a long time ago on another account, and they had a quarter or a phase 3 data release on one of their drugs that is already approved in Japan, and so I thought that it would run. It actually ended up going from $3.16 all the way up to $4.16, but I was in the middle of working and I missed that run and ended up actually having to sell for a loss. So I'll show you guys that trade in a little bit. Also, AGI is our free stock that we got, the gold company, Alamos Gold. And so we made a decision on that as well. So I'll update you guys on those first, and then we're going to get into the other 4 that I ended up trading today. All right, guys, so I don't want to talk too much about Akebia and AGI just because they were just like kind of, one was a free stock and one was a little bit of a test. But Akebia was, there was the opportunity was there. We bought it at $3.25. It shot up to $4.18 and then just tanked afterwards. It was a phase 3 data for a drug that they already had approved. They have $300 million cash on hand. So I thought it was a good buy, and it was a good buy. I just was at work and wasn't paying attention to when to exit the trade. I didn't have a stop loss, and it just basically was a prime example of how I didn't follow my strategy. I bought in at $3.25, so I was a little bit late on the SMA line. I didn't sell out when I crossed the SMA line back on the daily, and it just continued to drop because I didn't have a stop loss. Luckily, I got out at $3.09, so I only lost a small amount of money, which the summary will be at the end of the video. All right, let's move on to AGI. So AGI was the free stock that we got. Unfortunately, we had a really red day in the middle of all this, and we ended up selling out for $8.31 because we didn't do our due diligence and we didn't understand that there was a earnings report coming up for them, and this was the mistake we made, that we just could have made more money on them. But it was a free stock, and so it's fine. No big deal. We're good. All right, let's get into the trades that we made today on Friday, October 30th. First off, I want to talk about Moneygram. I am so upset with myself, and I cannot believe that I missed out on this price action. Guys, I placed an order right here for $5.24, thinking that we might be able to fill it. As I was hitting buy, it shot up to $5.39 and never came back down to that $5.24. And so it just kept going and going and going, and we could have sold here following our strategy, because I told myself today I am following the strategy. We would have sold out for $5.61, and we would have made a quick couple bucks. Instead, we made nothing. And then I was so frustrated that I went over to MGEN that was just crossing the SMA line. And I bought in right here at $1.52 with a stop loss of $1.50. And so I was thinking to myself, okay, this one just crossed. We're going. We're making all the money that we could have made back on Moneygram. And as soon as it filled, we get stopped out. And it was very upsetting. But once again, I want to explain to you guys, this is the strategy I'm using. And so I can't be upset when I do get stopped out, because had we had been following our strategy and had we gotten in, we would have made a good chunk of change on Moneygram, and we would have lost the minimum on MGEN or Miragen. And so that's okay. And then I didn't see this, but once again, this would have been following the strategy and we could have made money there, but I just wasn't following it at that time because I was too busy trading TRVN, because I had just tilted to the point of now MGEN lost me money. And so TRVN is now getting to the point where it's crossing the moving average line. And so I decided that I am going to buy at $2.56, which was right over the 9-minute moving average line. And as soon as I buy it, I got stopped out. But because I had the stop loss, I didn't lose the maximum here, which is okay. And like I said, with MGEN and TRVN, those prices never got back to where they were at pre-market. So we would have been really struggling here if we had not had those stop losses. So the strategy is working by mitigating losses, guys. So that's good. That's a good sign. All right, after that, we decided to go to MVIS Microvision. And guys, this one was the winner for the day. I am so happy for this stock and this play and this strategy, because this right here proves that the strategy works. The whole day I was upset. I had missed out on MGI Moneygram. I had lost the minimum on MGEN. I had lost the minimum on TRVN. And this one was my last hope. And so I bought in at $1.76 and it just went, baby. Here I was close. I was close to selling, but it had not yet really fallen below this line. And so I kept it, and good thing I did. Right around 186, we moved that stop loss up to 183, securing in the profits. And then right as soon as we went to 183, boom, this little crash happened. All the volume went away. Everybody decided to sell off, and we made the right choice. So we ended up selling out at 183, right around here. It hit our stop loss. Kind of stop hunted us a little bit, but it's okay. But this was a nice little move right here. All right, guys. So that's going to bring us to the end of episode 2. And unfortunately, it was a red day. We did not make enough money on that Microvision trade to cover the rest of the losses. But had we had made that Moneygram trade, we would have actually been in the green, which stinks. But it's okay, because it's a learning experience. We learned something new today, and that is that our strategy is actually pretty good. It limited the losses on our bad trades, and we made some good money on the winning trades. And had our order gotten filled on that Moneygram trade, we would have been okay. So also, the Zynga stock is free. The AGI stock was free. The AKBA stock was a bad move on my part that I just was playing around because it was a bad mentality to have. So really, if we take all those out, which I know we can't, we're still sitting in a pretty decent spot. We only lost like $1. So it's okay. We're fine. We're good. But guys, I'm so excited for next week and what is to come. It's election week. It's going to be wild. It's going to be a crazy ride. So I'm excited to see what actually happens. So we're sitting at 262.80 in the account right now. We do have some free stocks that are going to settle, so that's going to be boosted up again. We're probably going to be around 300, but for now, for this video, we started at 282 and we are down to 262. So we lost $20 this week, which is, it's going to happen. It's going to happen, guys, but it's okay. If you like this video, if you enjoyed it, please leave some feedback for me. This is obviously my only third video on the channel, so I want to hear from you. I want to know what I can be doing better and what I can fix and things like that. Also, don't forget to subscribe and like the video if you want to see more. Have a good one, guys. Remember, don't be average.